Hey everybody, this is Jim at SP500chart.com. It is 4:30 on Labor Day, September 1st, 2014. We're going to look at what happened in the markets last week. After I remind you that the website and this video are for educational purposes only. Nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I'm not a licensed financial professional, I'm just a guy who draws lines on charts. So let's take a look. Okay, looking at a 30-minute chart, this is going to be pretty easy to discuss because really, when you have a day where you're just kind of, not that much changed. So, we were looking at this inverted head and shoulders pattern back here in this oval that has long since made its target at 1984. We actually made a little bit more than that. We got up over 2,000. And now the question is, what's the next thing that's developing? To my eyes, it looks like we may be forming a larger inverted head and shoulders pattern, potentially with all of our left shoulder being over here, kind of a double dip left shoulder, the head, and now the possible formation of a right shoulder. And basically, for that reason, I would expect some weakness. But the market keeps saying, no, not going to give you weakness. I'm just going to keep putting upwards pressure on things. But the wick really was flat. Okay? We knew we were coming up to likely resistance somewhere up in this area, and with the high we had on Tuesday, I redrew the potential neckline for this inverted head and shoulders pattern. So my basic outlook right now, and again, this is a guess because we don't have a pattern, okay? It looks like we may have a pattern, but not yet. But my guess, capitalize that word, guess, is we form a right shoulder over here, somewhere in this region. It may go long, it may go short. It could be symmetrical with what we have over here. Let me look at this on a 1 hour chart, brings it a little bit more perspective. If it's symmetrical with what we have over here, then we've got a couple weeks that we could be in between this support line and this resistance line. But if it's one of those truncated patterns, and you know what I'm talking about, then we could be over here just a few more days. But the idea being, the S&P has shown us now, I believe, where the line in the sand is. It's right here. Get over that. And I believe we will be looking at a target of right about, depending upon when that move over this line could take place, we would be looking at a target of around 2,100. Now, does it mean we are definitely going to make that at this point? Absolutely not. What's got to happen? Well, simple. The best case scenario would be we spend a week to 2 weeks under this line in consolidation. The better, even better than that, would be if we were to do that consolidation with some kind of bullish pattern like we had back here for the formation of the dip in the head with this bull wedge pattern. So guys, it's pretty doggone simple. The week was, for the most part, slightly up. But the real moral of the story is we identified resistance to a more refined degree than what we had before. We bounced off that resistance. It looks like we are now maybe in a series of a second or third back test of this broken support line. And if we start to sell back down off of, say, 2007, 2006, if we sell back down to 1984, ain't no biggie. As a matter of fact, as long as we bounce down here, that would be, I think, the most bullish thing we could be looking at. So to me, just with what, and I think you would agree, the most bullish case, the most bullish scenario we could see develop over the next week or two would be to stay in between this line and this line, and then eventually come up and take this thing out. That would be pointing us up to 2100. So guys, you know, I could go on and on. I could say that 4 or 5 more ways, but honest to goodness, that's just the long and short of it. It's I think we are going, well, let's just see what happens. I think it's going to happen. But until it has, obviously it hasn't. So, you know, I hate to say this is the big weekly review where we step back from the chart and we, hey, it is what it is. Resistance right here, left shoulder, head, potential right shoulder, and if that's what we get, then we're off to the races. Now, you might say, well, certainly there is a bearish scenario. Sure. The bearish scenario is it's a double top. Here's your first, the left peak, and your right peak is forming. But I'll remind you, double tops aren't really that common. You hear the term way, way, way more than you see the actual phenomenon. And the reason is every time you are in a channel and you are moving upwards, without fail, you will always have many, many opportunities to say to yourself, double top. Here's an example. Looking back on this chart, which is a daily chart, if we go back to 2012, when we got back up to around 1467, you probably had people saying, because we'd been there before, back here, you probably had people saying, double top. No, not a double top. We come up here, we get up to 1530, we sell off a little bit, come back to 1530. Were people saying double top? Almost guaranteed. Over here, 1683, come back to that level, start to sell back, double top. Nope, not a double top. Come back up to here, people saying triple top. No, not a triple top. You see what I'm saying? Anytime you are in a channel, you're going to have bears come out of the woodwork and screaming double top, triple top. And here's where they get it wrong. You don't define a double top with the formation of a second level that is approximately what the first level was. That's not a double top. A double top is only confirmed when you get down underneath the lows that were in place before the second rally began. So, in order for us to say, yes, this is a double top, we would have to take out 1905. So even if we have weakness over here, by the textbook, it's not a double top until the intermediate low is taken out. So, if we come down by chance to 1950, am I going to say double top? No. Will I say maybe double top? Yes. Okay, just like I'm saying now, maybe double top. Maybe. Most likely not. Maybe. Okay? So, guys, let's just keep our eyes on it. See if we get that right shoulder, right inverted shoulder to develop. That would be absolutely the best case scenario. So, guys, thanks for watching. Hang with me throughout this week. I'm trying to nurse my voice back to health. It's rough going, I'll be honest with you. But signs of progress, but not what I'd like to see. So, guys, thanks for watching. Thank you for your support. And hope you had a great Labor Day. Let's see what the markets reveal to us in this 4-day week coming up here. Take care.